The way lions hunt in an unsafe environment should teach you something as a trader. Lions doesn't go for a bigger prey, rather they go for the weakest prey when the environment is not safe. The reason why I'm telling you this is before I start this video, this is some kind of advice I want to give to you guys. It might be useful for you in your next analysis and next week coming. Currently, the forex market is quite uncertain. That's why you see big traders, big names losing trades back to back, going into drawdowns. That's because a lot of us have not yet adapted to this current market environment. Now listen, what I noticed that kills traders recently for the past 2 months now is that some of us intend to, like, some of us set our take profit quite too far away, especially the beginners traders who always intend to use one stone and kill 30 bets. You must, if you've been trading for the past 2 months now, you notice that markets sometimes take you out not because of your analysis or your system is wrong, but just because your take profit is quite too far away. That's the situation where you see trade going 60% into profit and later it reverses. I know that feeling. I've experienced it more over and over, and it's very discouraging. Sorry, it's very discouraging, disheartening, and it's frustrating, especially for traders who find it hard to fund their account. Traders like myself who are still struggling. Now, what do we do in this current environment? Just like I said about the lion, you go for the smaller prey. Now, listen, when you do an analysis and that analysis gives you like something like 5R, try and reduce it to 3. When you get a B plus setup, don't try and go for the next support zone, next resistance zone, next demand or supply zone, next anything. Just try and trade 2R, 3R instead of going to the nearest resistance or support zone. Because currently now, I think market has forgotten what support, resistance, demand, supply zone is, because they don't react to it. You see market, you enter a trade 5, 10, 20 pips, it reverses. 5, 10, 20 pips, it reverses. Market is currently unsafe, and the only thing we can do right now is just to take our little things and move ahead. And negligent to this, you will fall a victim. That is, you will become a sacrifice for the market, for this current market uncertainty. And that is it for the advice I have. So today is Sunday. I want to do a quick analysis on gold. Not going to be too complicated, just a simple something. And I'll tell you guys my expectation on gold. I'm currently expecting a dump gold. That is, I'm expecting a sell on gold after a pullback this week. So I'll just explain everything on the chat. Do not forget to subscribe to become a member of this community. As of the time of making this video, this community is currently at 41 subscribers. So let me know the subscribe you met it as, and do not forget to like and subscribe. Now let's head over to the chart. Gold on the weekly time frame. Let me first clear my chart on this gold. Now my chart is clean. Gold on the weekly time frame. You see that gold is on the moon. It's currently flying. Now before I go ahead to explain and give you my analysis on this gold, I have to explain to you the reason why gold has been on the moon for all this while. Now, for those of you who doesn't know, gold has been flying for quite a long time, mostly because of this trading war between China and US. This tariff stuff, all this tariff stuff that Trump came up with, this tariff news, and the Russia-Ukraine war uncertainty. And for those of you who doesn't know, gold, being a safe haven, always gain value when there are bad things happening around. When I say bad things, I mean economy uncertainty, wars, and stuffs like tariff. So now you see we are having some kind of pullback. If you see this, if you watch this last 2 weeks and last weekend, we're having something like a pullback. This is because the one major reason is because, number one, the US and China's and India are coming together. That is, they are coming together to reach out an agreement on this tariff stuff and end the trade battle between it. That's the reason why gold value is declining. And just remember what I said earlier, gold gains its value from an uncertain environment like wars. So now that we are seeing a cooling temperature and on the trade war, we might see a gold dumping down to like 3,000, 2,900. So now you know the reason why gold flied and the reason why it's coming down. Let's just continue with our analysis. Now on this weekly time frame, I want you to notice something. Notice how we have a bearish bar candlestick. You see this This is a bearish candlestick, and you know, anytime that this kind of candlestick comes, it always indicates a reverse so many times. So right now, this is how I'm going to trade next week. I'm already seeing some kind of a fair value gap on the weekly time frame. This zone right here, from yeah, I'm seeing some kind of a fair value gap. So now I'm going down to the daily time frame. Now this daily time frame, we see that we have some kind of demand zone sitting right here. This demand zone, the last candle before this implosive move, also broke structure right here. So we have a broken structure here, validating this demand zone. So in a long run, we might see gold pulling down all the way down to this 3,000 to 2,900. That is if we keep getting the kind of fundamentals we're getting from the China, India, and America. So that is it on the daily time frame. We see that we have some kind of magnet and a supply zone, a demand zone for price to come in future, and also have this fair value gap on the weekly time frame. So let me just go down on the 4-hour time frame and explain further. I'm not going to complicate things. On this 4-hour time frame, we see that market is currently reacting to the fundamentals we have at hand. So I changed this fair value gap box to differentiate it from the daily time frame. So now we see that market was on an uptrend, breaking structure to the upside. Then all of a sudden we have this massive sell-off after the fundamentals started popping out. Now this sell-off broke this structure right here. It broke out of this structure and changed this trend pattern from a buy to a sell pattern, because we later had this high, a double bottom, a reaction from that double bottom, and then we had a breakdown. So what this chart pattern is telling us is that if we have a pullback, market might probably be selling off again. Now this is how I'll go about my trade idea on this gold. Now on this 4-hour time frame, we already have it. We already know what the fundamentals is telling us. It's telling us to sell, and the chart pattern is also telling us to sell. So I'm going to making plans to sell. So the plan A on this gold will be, you see, we have a break of structure here, and this break of structure left us with a valid demand zone, supply zone right above it. The reason why this is valid supply zone is because it's the zone that broke this structure right here. It's the zone that broke this structure right here, and it has nice fair value gap and unmitigated demand zone. So this demand zone, this supply zone, is valid for me. So now the plan A is going to be, so the plan A will be, if price is able to pull back to this supply zone that we at our point of interest, then I will start looking for change of pattern. That is, I'll start expecting price to do something like this, have a low break, have a low pullback, a break of structure, low pullback, a break of structure. I might look for this pattern on the 15 to 5 minutes time frame to actually start selling. So the plan A is just simple. If price is able to pull back to this point of interest, supply zone point of interest, I'll start looking for a shift in pattern to the downside. If I find a supply zone from there, then that is where I'll be shooting for sell. That's from plan A. And the plan B is also this, quite simple, because we can't predict the market. We only give ideas and expectation on trades. Now the idea for this plan B for this trade is, it's quite simple. If price decides to first of all come and sweep this sellers zone, the sellers resistance zone, then this is what I'll be looking for, and this is what I'll be expecting on gold on 4-hour time frame this next week. I'll be expecting, if market doesn't go up here, it decides to come back down. For example, I'm expecting it to sweep this low deep into this weekly fair value gap, react from there, either pull back to this supply zone, or just give us another supply zone to trade from. And from there, if I still get if I get a supply zone, I'll wait. I'll also do the same thing, just like I would do here. Wait on the lower time frame and wait for patterns to change on the lower time frame, and I'll start shooting low. So that's just basically it on this 4-hour time frame on gold. Nothing too special. So just to conclude this, the plan A is simple. Wait for market to clear this high first, deep into the supply zone, give us a change of pattern in the lower time frame, and sell off. Then the plan B is, if market doesn't come up to way up here, then we'll wait for it to break this seller's liquidity, clear it, then give us a supply zone or pull back to the supply zone. Anyone will be waiting for a supply zone after this break occurs. Wait for a supply zone and do the same thing, go down to the lower time frame and wait for a pattern like this, a break of structure to the downside to sell down to this 3,000. So if this pattern is able to show this week, that is how I'll be planning to trade gold. So this is just my simple trade idea on gold. No need to overcomplicate the chart or overcomplicate you with too much concept. This is just how simple I analyze my things and how I keep my trades. So let me know if you like this analysis, and if you do leave me a comment and a like. Do not forget that no matter what, we must keep moving.
But we must keep moving. We must keep going. If you can't fly, run. If you can't run, walk. If you can't walk, crawl. But by all means, keep moving.